I think this is normal. It's ugly. If you can take advantage of it and add, then I would be suggesting that might be a good thing to do. And again, it's a good lesson in why not to use leverage and just be calm, think of the long term and carry on. So what I want to do is go through some of the technical charts that give me comfort to show why I don't think it was that big an event, even though it felt terrible. So here's the basic chart of Bitcoin on a log chart. And here's the trend line, and Bitcoin beautifully kissed the trend line. So now you would say Bitcoin has gone back to trend and is now free to rise higher. I also love to use regression lines, which give you 1 and 2 standard deviations versus a trend. This is the regression of Bitcoin from the low in March. And what it did was actually it broke through it, but bounced back above the 2 standard deviations oversold. Bitcoin's about as oversold as it's ever been. It's certainly as oversold as it was in March. And if you were to be able to deploy capital in this market and you still believe in the long-term story, which I do, then this would be the time you'd be buying and not selling. And that's a typical feature of markets like this. You need to be buying over time, looking for these sell-offs to give you an advantage to add in. These are the kinds of signals that tell you that the market reached the oversold point and has probably finalized where it needed to go to on the downside to flush out the excess leverage and the speculative hubris that sometimes builds up in assets like this. Don't forget, network effect assets are driven by behavior a lot of the time. And so human behavior tends to be quite volatile. So these assets are always volatile and tend to do stuff like this. Here's the Bitcoin price now versus the Bitcoin price in the 2013 bull run. It is almost an exact fit. And that suggests that these kind of pullbacks, and if this pattern continues to repeat, there's no guarantee, then it's going to tell us that we've got the bulk of the rise ahead of us. At this point in 2013, it actually rose 10x. Now, could this correction last a bit longer? For sure. Could we reach a new low? For sure. But you can see the risk reward is balancing in the favor of this thing now basing and then rising over time. And these charts are telling us that something like 400,000 is the upside in Bitcoin and 20,000 plus in Ethereum. I think they may even be overshot in this bull market, but that's the size of the risk and the opportunity here. If there's a 10x upside and a 50% downside, well, that's a hell of a risk reward. So that's why markets like this, they're hard, they make everybody feel terrible, but they also shake out some of the bad, weak protocol coins, some of the bad DeFi projects. They shake out people who have taken too much leverage and shouldn't be doing it. And what it allows people who are patient capital is to accumulate at the right prices.